One of the hard parts about being a dividend-focused YouTuber is trying to appeal to the many different kinds of dividend investors out there. Well, in my attempt to do that, welcome back to my Power 5 Stocks of the Week. In this series, I present you all with the leaders each week in the following categories: dividend yield, dividend streak, dividend growth rates, 10-year returns, and the stock trading the highest percentage off of its 52-week high. The only requirement for consideration to be on this list is that you have to beat the S&P 500 over the past 10 years and have a dividend streak of at least 5 years. But without further delay, let's jump right into this week's video. The leader this week for the best dividend yield is Cogent Communications, stock ticker CCOI. CCOI is a quarterly payer in the communication services sector, paying $3.70 per share per year, with a forward dividend yield of 5.89%. CCOI has been paying and growing their dividend over the last 11 years. They have a 3-year dividend growth rate of 13.37%. a 5-year dividend growth rate of 14.59%, and a payout ratio of 303.52%. Not sure how that works, but that's what I found. CCOI has an ex-dividend date of March 9th and a payout date of March 24th, and a $10,000 investment in CCOI 10 years ago while only reinvesting dividends since then would have turned into $38,006.79, which is a 14.28% year-over-year return rate. Comparing that to the S&P 500 that turned into $32,053.05, which is a difference of $5,953.74 over the last 10 years. The stock with the longest dividend streak this week is Lancaster Colony, stock ticker LANC. LANC is a quarterly payer in the consumer staples sector, paying $3.40 per share per year, with a forward dividend yield of 1.77%. Lancaster Colony has been paying and growing their dividend over the last 61 years. They have a 3-year dividend growth rate of 7.05%, a 5-year dividend growth rate of 7.64%, and a payout ratio of 50.94%. Lancaster Colony has an ex-dividend date of March 8th and a payout date of March 31st. And you know the deal, $10,000 10 years ago while only reinvesting dividends since then, Lancaster Colony would have turned into $33,568.30, which is a 12.87% year-over-year return rate, which does beat the S&P 500 that turned into $32,053.05 by $1,515.25. The stock this week with the best dividend growth rates is Wingstop, stock ticker WING. Wingstop is a quarterly payer in the consumer discretionary sector, paying 76 cents per share per year, with a forward dividend yield of 0.44%. Wingstop has been paying and growing their dividend over the last 6 years. They have a 3-year dividend growth rate of 21.65%, a 5-year dividend growth rate of 38.76%, and a payout ratio of 32.72%. Wingstop has an ex-dividend date of March 9th with a payout date of March 31st. And Wingstop only goes back about 7.7 years, but had you invested that $10,000 in Wingstop 7.7 years ago, that would have turned into $77,491.91, which is a 30.42% year-over-year return rate. And that's compared to the S&P 500 that in the same time turned into $21,774.06, which is a difference of $55,717.85. Who would have thought chicken wings could make so much money? Your move, Buffalo Wild Wings. Now, before we get to the stock that leads in 10-year returns and the stock that's trading the highest percentage off of its 52-week high, please remember to leave a like on the video to help others find the channel, subscribe and ring the bell to stay up with all the dividend-related content, and use the comment section down below to comment #BellSquad to let me know you're subscribed with notifications turned on. But now, let's get to this next stock. The stock that's leading the pack in 10-year returns is Comfort Systems USA, stock ticker FIX. FIX is a quarterly payer in the industrial sector, paying 70 cents per share per year, with a forward dividend yield of 0.48%. FIX has been paying and growing their dividend over the last 11 years. They have a 3-year dividend growth rate of 12.34%, a 5-year dividend growth rate of 13.68%, and a payout ratio of just 9.94%. FIX has an ex-dividend date of March 9th and a payout date of March 21st, and a $10,000 investment in FIX 10 years ago while only reinvesting dividends since then would have turned into $131,414.16, which is a 29.37% year-over-year return rate. And of course, that's compared to the S&P that turned into $32,053.05, which is a crazy difference of $99,361.11 on just one investment on just 10 grand. And this week's stock trading the highest percentage off of its 52-week high is Walker & Dunlop, stock ticker WD. WD is a quarterly payer in the financial sector that's paying $2.52 per share per year with a forward dividend yield of 2.85%. WD has been paying and growing their dividend over the last 6 years. They have a 3-year dividend growth rate of 26%, a 5-year dividend growth rate of 19.6%, and a payout ratio of 31.75%. At the time of recording, WD is trading 36.8% off of its 52-week high. WD has an ex-dividend date of March 7th and a payout date of March 23rd, and a $10,000 investment in WD 10 years ago while only reinvesting dividends since then would have turned into $47,354.04, which is a 16.82% year-over-year return rate, compared to the S&P that turned into that $32,053.05, which is a difference of $15,300.99 on just 10K just 10 years ago. As mentioned in the beginning of the video, all of these stocks have beat the market over the past 10 years, and all of these stocks have a dividend streak of at least 6 years. Use the comment section down below to let me know if you own any of these stocks and how they're doing for you. And if you missed my last video that breaks down if you should be a growth investor or a yield investor, check that out right here. But until next time,